Yeah, David, thank you so much for joining us this afternoon with that. David Faber over at the New York Stock Exchange. Let's get an analyst take on First Republic with Tim Coffey of Janney Montgomery Scott. He's on the Newsline. You've got a sell rating on it, Tim, obviously. You want to just pick up on what David said there and their strategic options at this point?
Well, a lot of that matches what we put in our report today, which included our downgrade to sell, was that the best pathway forward, and perhaps the only pathway forward for First Republic at this point, is to do an asset sale. Certainly there's a securities piece that they could sell, available for sale, held to maturity. But the striking thing of the earnings release yesterday from them was that their loan-to-deposit ratio was near 170%. That's really, really high. To bring that down to a more reasonable 100%, they need to sell loans. And so the idea that they would start selling or look to sell pieces of that residential mortgage portfolio, it makes a lot of sense in our opinion.
So if they're selling loans, the buyers, knowing the distress situation, are not going to, what are they going to get for those loans? Are they going to get anything close to par?
Unlikely. In our estimates, I think we were using a 20 to 25% discount on the sell. Right. And the First Republic, let's be clear, is not in a position of great strength here. There's going to have to be a discount. There's going to have to be some give. And we think it's in that 20 to 25% range.
So then what's next? If they're able to unload a sufficient number at a sufficient price, can they continue as an ongoing operation? Or if you spin the clock forward, are we looking at the death spiral of another bank?
Well, selling the assets is first of a two-part series of events that need to happen. The second part is they need to raise capital to fill the hole that selling the loans at a discount has created. Assuming they're able to do the second one, they're likely to undertake the first one. And then what we start to see is a company that is in a much better financial position from a capital standpoint, perhaps not at a great earnings standpoint, but the business can continue. We think, though, it won't continue in the same way that First Republic was in the past. Going forward, it's going to have to be a much different operation.
Tim, would you add any comments about the rest of the regional banks here and the sort of fall-on effect for them, knock-on effect for them from this situation being dramatically different today than it was just yesterday when, if we all recall, the shares were up as much as 11% into the earnings print?
I think there's two things that are happening right now. We're in the middle of bank earnings right now, and the first set of earnings were really good. Western Alliance, for instance, gave us optimism. Second half hasn't been as good, and First Republic is kind of a signal of that.
All right, Tim Coffey, thank you very much. We appreciate your time today, and I have a feeling we'll be talking to you again soon.